Hi YouTube, welcome back to the BMO Biweekly Buzz. I'm Rebecca Dyck, your BMO mortgage specialist.
And I'm Gill, financial planner, investment and retirement planning with the Cloverdale Bank of Montreal.
And we thought we'd have a little fun today and play a game of Jeopardy. What do you think?
I think it's a great idea. Should we?
Are you game?
I'm totally game.
So Sunny's going to be our contestant, and I have hidden a few surprises in there for him, so we'll see how it goes.
Awesome.
So Sunny, choose a category.
Let's get started. How about we go taxes, since it's tax season, for 200.
Taxes for 200, and the answer is 35,000.
So 35,000. Is that the homeowner buyer's plan for the RRSP by any chance?
You are right, you are right.
Awesome. So that's going to be our theme today, is RRSP, given it is a season. $35,000 is the maximum you can take out under the homeowner buyer plan for any first-time home buyers in Canada.
Yeah, awesome. All right, and we'll get moving along here. What's next?
Let's keep going. How about retirement, since I'm so close to that, for 400?
Retirement for 400. What have we got? Oh, we've got smash the like button. So don't forget to smash that like button so you can check out more of these lovely videos from us here
And
at the...
subscribe.
Yes, and don't forget to subscribe. All right, well that was a quickie. What do we got next?
All right, let's try retirement again for 200.
For 200. Tax deferral strategy.
Awesome. So the RRSP is known to be a very popular tax deferral strategy. What that basically means is that any dollar you put in of your earned income into the RRSP is a dollar you don't have to pay tax on today until you take it out.
Yes, awesome. And now, okay, so I'm still going to pay tax on it?
You'll still pay tax on it one day, just not today. Eventually when you retire, hopefully that money's grown, and when you take it out, you'll pay taxes then.
Okay, and so then if I'm going to pay taxes anyway, what's the point of putting it in the RSP?
Good question. So basically you get to keep that money in your pocket instead of the CRA's, get to grow it for as long as you like, up till 71, and then hopefully make some good money on it and pay taxes on it later at a rate that you wish. So you can take money out of it when you retire after that $1 has hopefully grown to $2.
Nice.
Tax free.
And, and I'm assuming my tax rate then would be different
Yeah,
in retirement
so
than it is now, right?
Ideally, when you put money into your RSP, you put it in while you work, and when you retire, you might not be earning as much income. So hopefully when you take it out, you'll be in a lower tax bracket, which results in a permanent tax savings.
Ah, there we go, there we go. All right, Sunny, choose a category.
Ooh, we're almost there. How about we go save for 200?
Save for 200, all right. CRA notice of assessment.
All right.
So I think maybe first, if you want to tell people, well, first I'll let you answer the question. Look at me getting ahead of myself. What's the question?
The game's getting too exciting. So CRA notice of assessment is where you would find your annual contribution room. Everyone can put in a different amount into the RRSP subject to some maximums, but your notice of assessment is where you would find these details. So after you file your income taxes, Rebecca, you get this letter from the CRA and it shows you on the very bottom.
Right. So you have to submit your taxes first, and then the government sends that information back to you. So anything you get from the government in the mail, please don't put it in the recycle bin. Make sure that it goes into at least a file or a pile somewhere so you can get to it later.
Especially the tax man. Don't throw that one
Yes,
away.
we don't want to mess with the tax man. All right, choose another category.
Sure, let's go save. Stick to that for 600.
Save for 600. What do we got here? Ooh, if you get a little rippy there. As many as you like is the answer. Ooh, this could be interesting.
So one of the common questions we get from clients is, how many RRSPs can I have? And the answer really is as many as you like. As long as you have money within your contribution limits, you can have them wherever you want, at many banks as you like. But we usually recommend having it in one place so it's easier for management and that your financial planner can put a really well thought out strategy for you together.
And I bet that probably saves some money too in terms of
Totally
fees and
does.
costs, right? Expenses.
Totally does. If you have it in one place, it should be cheaper than having it in 5 places. And talk about your time. Imagine running around to 5 different banks to manage your RRSPs when you can have it all in one place, like BMO.
Awesome. All right, choose your next category.
All right, let's change it up and do taxes for 600.
Ooh, taxes for 600.
That one seems exciting.
It's yellow. And reminder to subscribe so you can see the remaining content we got coming up for you on the BMO Biweekly Buzz. So don't forget to hit that subscribe button.
Awesome.
Moving on, Sunny, what's next?
Let's finish retirement up for 600.
Retirement for 600. All right. We got, as soon as you have earned income, you can
Fill in the blank. Start an RRSP. So really, when you start working, you have what we classify as earned income. And earned income is what actually determines how much you're allowed to put in your RRSP, which will be further shown on your notice of assessment. So once you have earned income, you can put up to 18% of that into the RRSP whenever you want. So for example, Rebecca, if you can't put it in this year, it's not like that room is gone forever. You can put it in the very following year. So it does roll forward. For some of you bigwigs out there that make a lot of money, the maximum you can put in for 2020 is $26,500. So there are some maximums, but it generally is 18% of your earned income.
And we were talking earlier, and Sunny actually shed some light on something I didn't know. So when we talk about earned income, the first thing I think of is just employment income, right? You go and you get a job, and now you have income. But tell me what else earned income can be.
Totally. So earned income can be several things. Usually the most other popular one that we hear about is self-employment income. So if you're in business for yourself and you declare it as earned income, depending on how your accountant does your taxes, some of it may be earned income, thus you can have an RRSP. Other ones that we often see are business related as well, where we have active people in real estate and they have lots of rental income, so that can also classify as earned income.
Oh, I didn't know that. Learn something new every day. All right, choose a category.
Got two more, so eeny, meeny, miny, mo. Let's go save for 400.
All right, save for 400. Registered Retirement Savings Plan is the answer.
So since we love talking in acronyms, RRSP, what does it stand for? Registered Retirement Savings Plan.
And so with the RRSP, I guess we're just looking again, the tax advantage. We want to minimize those taxes. We don't want to pay the government more than what we have to.
We need to.
Yes, that's for sure.
And this is again an easy way to save a little bit of taxes.
And the other question I've had clients ask is, they just want to get an RRSP.
Yeah.
But they want an RRSP, but what is that?
Yeah.
Like,
think of it almost like a bowl, right, with special rules around it, that if I put money into it, I get a tax break. And when I take money out of it, I pay taxes on it. Simple as that. But it's unique because once there's money in it, you can invest it however you want. So you can actually grow your money. So you can put it into cash, you can put it into GICs, you can put it into mutual funds, stocks, exchange traded funds, a lot of different investment opportunity out there, options out there. So we highly encourage, if you don't know what those investments are, to speak with your financial advisor.
All right, so it looks like taxes for 400 is your last
Our
one
favorite
here.
category, taxes.
March 2nd.
March 2nd, that is 2019's deadline for RRSP contribution. So 2019, because whatever you contribute up till this date will be applicable to last year's income tax. So you still have a little bit of time if you want to add money. Anything after March 2nd will be applicable for 2020's income.
Awesome. So that is the deadline, and it is the 6th of February already, if you can believe it. So you don't want to leave this to the last minute. Give your advisor a call and see what you can do with your RSP there. So thank you guys so much for watching. We really appreciate it. I'm Rebecca Dyck, your BMO Mortgage Specialist. This is Sunny Gill, our financial planner. And please click like and subscribe so you can see our future content on the BMO Biweekly Buzz. And we're here to help.
Awesome. We'll sign off and we'll see you in 2 more weeks. Thank you very much.
Thank you.